Hello and welcome to the Learn How Finance Executives Get to the Top of Their Game interactive webcast. With that, I'd like to turn the session over to Rob Augenstein. Rob, please go ahead.
Thank you. I appreciate this. Thank you very much for joining us this afternoon. My name is Rob Augenstein. I'm a partner with Next Dimension Technology Solutions. We're a business partner with IBM. And the topic of today is how to stay at the top of the game in financial performance management. The premise of what we're going to be talking about is the fact that there are things that are changing in financial management today, and we have to be aware of these changes and begin preparing for them as we look out for the next few years. We're going to discuss some of these trends that have been studied and analyzed by IBM and outline some strategies for addressing the needs for the future. So certainly we have some foundational information for you today. We're not going to actually demonstrate actual products, but we are going to talk about the specifics of them. At any time, if you'd like in the future, we'd be happy to provide additional information for you, either with additional PowerPoints, slides. This particular video and presentation today is going to be recorded. We will send a link to all the participants, and demonstrations of individual products we'll be happy to do on a one-on-one basis. So as financial professionals, we have some challenges. Would like to add that we're going to be joined today by our IBM partner, Ben Rettel, who is our Technical Solutions Manager at IBM, and he's going to discuss some specifics for us as we get further along. But as financial professionals, we do have some challenges. These are creating a lot of stresses for financial managers and professionals today, and it's actually increasing a lot of the responsibilities that we have. These are actually occurring in many areas within the subcategories, if you will, the individual departments within the financial management organization, whether that's in the controllership area where we have internal and external reporting, or the FP&A area where we're actually trying to do budgets and plans, whether it's investor relations or other things in compliance. What's happening is that the demands they're simply just getting more vast. We don't have as much time, it seems, to actually go through a lot of analysis. We're constantly responding to expanded demands and requests. And oftentimes, we are seeing at Next Dimension that the tools that are being used by those in the financial management area are simply inadequate to meet the needs that are being brought down from on high. So there's a lot of extra work that's actually being invested towards transactional activities, and in fact, not as much time being spent on the analysis efforts. So what has actually happened here is that IBM conducts what is referred to as a biannual CFO study. They actually most recently in 2010, I know it's a couple years old, but the actual themes that are from the CFO study, they're very relevant even now. There'll be another one that's created over the next 12 to 18 months. But in the most recent study, IBM commissioned a review of 1,900 CFOs. These are, whether they're CFOs or senior financial executives, they covered vast geographies, not just in the United States, but worldwide, crossing many, many different industries. And not only just industries, but company sizes. So whether it's a public company or a closely held company, one in the commercial sector or in the public sector, IBM was able to evaluate the individual concerns and priorities of these financial executives and be able to document that and promote it so that we could actually have, as Next Dimension, as a partner within, in relationship with IBM, to promote that to our clients as they address their financial needs. So there were some there were three themes that came out of the most recent CFO study. We're going to talk about these themes, but what's one of the things that's been happening is CFOs, we're being told, are being asked to not just work in their financial area, the traditional financial area. Their role is constantly expanding. So what we're going to talk about now is these themes, how the role is expanding, and an approach that we suggest that to address it. So one of the first themes is that there's a real challenge with efficiency. It is if you look at these underlying problems of producing metrics manually, having a common reporting platform, working more than half actually working on transactional activities, these are all kind of centered around this efficiency problem. And there's a way for that we're able to assess of addressing efficiency. So those that seemed amongst the group that were studied to excel at efficiency, they had some underlying reasons, and they were kind of interesting, actually. One of those reasons was that within finance, there was a greater sense of ownership of processes, that they were able then to be responsible for whether it be transaction workflows, the data itself, but they owned the process. Another one of the underlying reasons why those excelled were that they actually had a common technology platform. So those that were excellent actually shared that. And then they also shared the ability to have some alternate delivery methods. And this actually lends itself to a bit more of a technology strategy question, because we see that being manifested today, for instance, in shared service organizations and cloud deployments. So those that had efficiencies actually had embraced some of those. And that was kind of an interesting summary of the first theme. The second theme is that there's some real challenges with business insight, with insight. So if you're having trouble in dealing with, let's say, transactional processing components within your organization, you're not going to have a lot of time to be able to focus on analysis and to be able to have the kinds of insights that are necessary to propel your organization forward. So those that excelled, though, it seemed as if they were actually able to address the dominant factor that influenced their ability to do that. And the dominant factor overriding all of business insight was, in fact, the underlying data itself. So those organizations actually were able to do some things by having automated metrics. Now, those metrics might, in fact, be financial, they might be operational, or what have you, but they actually had gotten deeply invested in the actual data itself and were able to consolidate that. They'd also created and established standards around some of the non-financial data. So when we think about things like click-through rates, marketing, et cetera, then there might be some standards that, in fact, the financial organization had been able to promote. So that leads us to the third theme of what has been transpiring amongst financial executives, and that is that if you can do both, efficiency and insight, really well, you can build value for your organization. And the combination, this of course is a very difficult combination to achieve, but those that did actually lead to much greater returns for their organizations. So that's true. That was true because not only did the CFO study the actual relationship of efforts being and concerns going on within the financial world and the financial organization of these companies and entities, but they actually also looked at their underlying financial results. So those that actually did both efficiency and insight really well actually were able to accomplish greater revenues and greater returns on invested capital, greater earnings. And when you think about the possibility of whether it be whatever size organization that you're a member of, if you increase revenue at a growth rate greater than what you're currently, then that could have manifest itself in some significant value to the organization. The same is true with earnings as well. So when we combine these results of actually having insight and efficiency, we actually build up to 4 profiles. Those profiles, and you can see these in a chart that's being demonstrated here, of, let's say, if you were a low insight and a low efficiency as in terms of your terms of scores, then you're actually would be referred to and characterized as a scorekeeper. And that would be someone who really doesn't have very much time to deal with analysis, that you're dealing with multiple versions of the truth in terms of what you're dealing with on a day-to-day basis. If your insight is low but your efficiency is high, then you're actually very disciplined. You're doing very well at this. If your insight is high but your efficiency is low, you're actually have some constraints. And it's really the value integrators, those that are doing both very well, that we're really trying to identify. And we're not trying to identify them, we're trying to evaluate what it is that they're doing well. What are those differentiators? And what do we have to do in order to become a value integrator, someone who's actually building value for the organization? And herein lies the challenge, right? This is what we're dealing with. We still have some constraints, though, and those constraints are that we're dealing with, in many cases, desktop applications, and so that is a real challenge that we face. I mean, we have responsibility to generate all kinds of documents, all kinds of reports, what have you. They're going to get pulled from many data sources. We're going to involve multiple people in the process. They're process-driven, yet these are tools that are not necessarily purpose-built to accommodate that kind of capability. And so what IBM is saying is, gosh, we really have to find a better way to do this. We need something more than that, than what we're already given. And in fact, not only that, but there's an expanded role for finance. We actually have to take not just this message of being data-driven, of being quality-driven relative to that data and having standards associated with it in our own area, but gosh, we're being asked to get more involved in operational areas as well. So it's a little bit of a paradigm shift for those in finance. In order to accomplish that, we need a new approach. We need to have what I would say here, and what we say here at Next Dimension, is we need to have something more comprehensive. It needs to be fully integrated. It needs to be automated. And that is why at our organization we've embraced the IBM approach. And it's a bit of a philosophy that's oriented around having a complete solution set around financial performance management. Now, when we think about financial performance management, we're actually contemplating and we're talking about elements of the accounting process, close, doing consolidations, financial reporting, filings potentially, or disclosures. And IBM has an entire set of applications that actually are able to meet these needs. We're not going to get too far into all of these today, but suffice it to say, if we need a demonstration of any single one of them, we'd be happy to provide that. And when they're actually implemented comprehensively, then there is a solution set from IBM that meets all of these needs. Now, they can be implemented as a group. They can be implemented incrementally and one at a time. But each one of them provides mechanisms for data capture, for the ability to aggregate and report on data, and be able to provide the level of disclosures that are necessary in order to meet the needs of the growing organization. Let's move on, and I wanted to talk about an architecture of these solutions. And this slide's a little busy, and I understand that, but suffice it to say that we're going to be pulling data from a variety of systems of record, whether that's the ERP system, the GL, the data warehouse, other operational systems. And we have to be able to produce significant types of information out if we're going to be operating within the financial world. And that might include Excel reports or financial statements from the standpoint of typical accounting, GAAP and IFRS type reports, the ability to do disclosure management. So these types of things, whenever we think about them, we actually believe that they're absolutely essential. That they're essential because as a financial officer, what we always seem to gravitate towards is, let me look at the financials. I've got to look at my financial statements because that's going to be the thing that, as a CFO, as a financial executive, that I'm going to gravitate towards. That's going to be my truth, and everything is going to be built around that. It is the cornerstone element of what we need to talk about. And as it relates to, in particular, IBM and the solution set that they have, there is, in fact, a solution for that. It's referred to as Cognos Controller. It is the tool that we use and we have available to us that helps us with financial consolidations. Now, we also have to be able to do disclosures, and that, whether that is for public companies, for private companies that have some fairly complicated roll-ups or disclosures, compliance reporting, or, in fact, those in the public sector. And in the public sector, the level of reporting that they have and responsibility for compliance seems almost as vast as what it is for public companies. So just briefly, there is a solution set for disclosure management, and what we have from the IBM solution set is the ability in a controlled way to link to that enterprise data. We have workflows and the ability to collaborate and roll over reports from one period to the next. Ability to have business rules and validations. And while this is just a very brief analysis at the moment about disclosure management, the thing that I wanted to bring it up briefly, but again, if this is something that you're interested in, we can be happy to talk about it. But at the moment, I'd like to just kind of pass my screen over to Ben Riddell, and Ben is a technical solutions manager with IBM, and he's going to describe in more detail the Cognos Controller application, because it is, in fact, the cornerstone element of what is needed from a financial management perspective, because then we can build all around it with other tools that are necessary in order for us to have a very controlled mechanism for financial performance management. Ben, are you there?
I am. Good afternoon, everyone. Thank you, Rob, for your insights there. What I'm going to be doing over the next sort of 20 to 30 minutes is kind of taking you through one of the key components, which is the financial close management process, and that's really highlighted using one of our solutions controller, which Rob mentioned there. Just a bit of background about myself. I'm a technical solutions manager within IBM. I work very closely with our clients and our partners around, talking about the solutions which are best fits for, different requirements, and that might be around disclosure management, it might be around financial consolidation, it might be around operational reporting, budgeting and planning, and all those different processes really that an organization would see within the performance management space. So one of the key things, I've worked with our consolidation solution for over 13 years now. So I've worked as an implementations consultant. I've worked in, the solution selling side as well. So I've got, a fair amount of experience, talking about how this has provided benefit for existing and how it can provide benefit for new customers going forward as well. So one of the key things that I always talk about is really when we go through the solution. I'm not going to be doing a demonstration today, but as Rob mentioned earlier, we're happy to engage and happy to go through in more detail with you what our solutions can provide and have more detailed conversations in a follow-up. One of the key things I'm going to be talking around is really some of these 5 or 6 points you see up on the screen. One of the major benefits and one of the major approaches we take is really it's a configuration approach. It's a finance operated and managed process. So what does that mean to you? It means that really this isn't an IT intensive process and application. It's not an IT intensive managed application on a month by month basis. We have a lot of organizations where the CFOs, the financial controller, the assistant controller, the consolidation accountant, they are managing this process and managing the solution on a month by month, quarter by quarter basis. We have a lot of inbuilt functionality. We have a lot of inbuilt financial intelligence. So what does that mean to you? It means that when you can be up and running, in a very rapid pace with our solution, and it enables you to really understand the processes and really map your requirements into the functional side of the solution that we're looking at. There's a lot of, things you'll like about what we're going to be talking about. It's a very familiar web Excel front end. So we know a lot of people in finance, it's very hard to get rid of Excel. So that's something we grasp and gravitate towards as well as part of our solution to give everyone really the buy-in that you would require in a process like this. So as we go through, I've kind of touched on this first point here, but really finance manages the consolidation process. So what does that mean? It means that we have a lot of things that help you really in defining how and what and really who is doing what within the solution. For SEC controls, for SOX compliance, for audit capabilities, we have all of those built into the solution. So what changes, when it changes, who changes it, all of that is tracked within our solution. It's really a process that can really be customized to handle very specific consolidation requirements. So, for example, if you've got something that really is out of the ordinary, so you might be a holding company that's into properties, and that's renowned to be quite a complex consolidation. That's something that, we work with many property companies on consolidating and dealing with their very complex ownership of how they map and how they own their properties. So that's something that we have the inbuilt configuration, but the ability to be very flexible with that. We want to ensure that data is consistent. So what does that mean? We have validation controls. We have reconciliation controls. We ensure that the data coming in is accurate and there are going to be no inconsistencies, that when we come to prepare our 10Ks and 10Qs, that the data we have, we can really put our thumb on and say we're accurate and we believe in our data. We're very flexible in managing mergers and acquisitions. We have a lot of organizations that grow through acquisitions. So, those might be a merger where it's, two large entities coming together. We've actually got an organization right now we're working with that's very similar to that profile. We have companies that do acquisitions over time to grow. So you're going to see challenges of multiple ERP systems, multiple general ledgers. So how do we map those systems into a consolidation solution? And that's part of, one of the benefits you're going to see with our solution as we go forward. The ability to have what I would say a very flexible organization, very flexible structural network around the application. You don't need to be a coding expert. You don't need to know anything around XML. You don't need to know anything around, C++. It's all stuff that you do through application-based screens. So you don't have to be an IT expert to actually maintain and work with our solution going forward. And we can monitor many tasks that go along within the solution as well. We have the ability to track exactly in a very disparate consolidation. We have organizations where each of their subsidiaries are having access into the solution. So you want to understand when, what, has the data been approved, and has it been submitted by each of your subsidiaries. So we have a very detailed tracking mechanism to who's doing what and when things are complete each month, each quarter. You go through that closed process. We have a lot of inbuilt best practices. So allocations is often a part of a consolidation. So that's more when you do a management internal consolidation. We have organizations doing both external reporting up to the SEC, plus their own internal management monthly consolidation. So the need for a monthly consolidation may require you to do allocations, which is taking an expense, a corporate expense, and maybe allocating that across the business units based on, for example, headcount. So a lot of these things are best practices, and those are part of the solution that are built up for, customers' requirements. Intercompany elimination. So what's that process? So this can be a process that can be a very, very large spreadsheet within organizations. We have, as part of our solution, the ability to do the intercompany matching and processing directly within the solution using the application functionality. And I'm going to be showing you some screens later, so just to give you an idea of what some of these things look like. A lot of the processes around automatic eliminations, adjustments. So when you do an acquisition, you're going to have the capital stock you own in a subsidiary. You might be a minority holding. So how does it handle all of those automatic eliminations and journals that may happen on a month-by-month, quarter-by-quarter basis? A lot of what we're looking at is really how this integrates into the whole performance management solution. So how the data here in a consolidation is integral to your financial reporting, whether that's providing actuals to your budgeting and planning process, whether that's providing your current data up to the scorecard. So it might be a CFO dashboard you have, where you have certain key performance indicators that you need to manage and actually have the data flowing through that comes from that monthly consolidation. So this is really an integral part of the whole of that process. Now I'm going to take you through a few screens so we can take your mind off all the words there. But one of the key things here, this is a view of the organization hierarchy. So this shows you the ability to have top consolidations, the sub-consolidations. It shows you the subsidiaries, and you can see this is multi-currency. So we have many of our organizations are global organizations, companies like IKEA, where they are a company where they have companies in all different jurisdictions around the world. We have organizations where, they have very complex ownership. So, for example, you might have a company that has minority shareholdings. You might have a company that has joint ventures. You might have a company where you are just an equity partner. So how do you account for that process? So this whole organization hierarchy enables you really to understand and really model how you want your organization to look, not just now, but also in the future. We have the ability to have unlimited hierarchies, the ability to have periodic hierarchies. So when I talk periodic hierarchies, you can see how your organization has evolved over time. So for example, if you make an acquisition this quarter, that acquisition wasn't there last quarter, so you can see the organization before and after those changes. So we have organizations where they have legal, they have tax, they have management hierarchies. So you've got the ability to have a very, very complex and a very, fluid hierarchy that you can see very, very easily here. The ability to have segmental analysis is also important when you're doing 10Ks, 10Qs, even your internal reports. You may want to report things by cost center, by products, by markets. You may want to hold different types of analysis on the profit and loss statement, where you want to look at revenue by, X different factors. So this gives you the ability to do the segmental reporting as well, and to understand, to be able to drill down into that detail and provide that detail to a wider audience. Your chart of accounts is often your key part of your consolidation. So your income statement, your balance sheet, how do you do your cash flow right now? That's a key financial statement that a lot of people still have that manually in Excel right now. So that's something that we can fully automate. So you can not just run a cash flow at your consolidated entity level, but you can have a cash flow at your subsidiary level in local and consolidated currencies. So you may have a European company, for example, in the UK, that's reporting GBP through Europe. So they may have their financial statements in GBP plus euros, but that euro group then consolidates up to the US. So you'd actually be able to see that UK company in any inherent currency above itself within the hierarchy. So I could run reports for that UK company, and they would all tie out with all the currency translations converting correctly. I could see that in local currency, euros, and in the US dollar as well. So that's some of the key features, you're going to see a lot of information on the screen, and this is just one of our configuration screens, but as you can see, there's no coding. You can't see a box where you put any coding. It's really here where you define what the type of account is, what the currency conversion methodology is. You can have multiple languages in here as well, so you can see your chart of accounts, not just in English, but you can see them in Spanish, in French, in German. You can have a multitude of different languages that a user has which are specific to them in a multinational organization. Some of the audit controls I talked about earlier. This is the ability to track what's happened, who's done it, and when it happened. So if you add a new entity into your organization, or even if you delete something, obviously you'd have to have administrator rights and the ability to make changes, but this will track exactly what happened. So for Sarbanes perspectives, for auditors' perspectives, you can really show them the ability of what's happened and when it happened within the solution. So audit control is a key measure and a key part of the solution. Part of the solution, not everything is available in a trial balance. You might not have some statistical information, so you might be collecting some statistics like headcount, units sold if you're in the manufacturing space. So it's the ability to have an input mechanism so you don't have to import everything. You can actually directly enter data directly into the solution. And this doesn't always just have to be numeric. You can hold commentary in here as well. So I can never think of good things to say. That's why I've got big cost Ben. But anyway, it gives you the ability not just to collect the numeric, but to collect the commentary associated with that. You can also attach documentation. So for Sarbanes perspectives, if you need to have a signature for the CFO to say, yes, I've signed off on the third quarter's results, you can actually scan and keep a copy of that signature directly in the database as well. So you're going to keep a track not just of the numeric information, but all of that supporting information that comes with it as well. Journaling. Obviously we have multiple jurisdictions around the world, so GAAP reporting, IFRS reporting, which is now coming across here, is the ability to have your different sets of books according to your local GAAP and to your IFRS reporting standards or your US GAAP standards. So we have organizations that will keep the historic data according to the local GAAP and then have that converted into IFRS. But the journaling capability enables you to have the approval process around the adjustments, the ability to have temporary, fixed, reversing journals, and journals that aren't just maybe for, the formal process, but they are for managed, so you might have management adjustments when you're doing an internal set of books as well. So some of the stuff I'm talking about here is the flexibility as well. So we've talked, a lot around, the multiple views from the legal, the management, the tax perspective of the organizations. You can also hold the budgets in here. You could hold the plans in here. So you can do a consolidation of your budgets and plans along the same rules as you do for your actuals. So this gives you the flexibility to do comparative reporting. You have the ability to do, obviously the IFRS, the GAAP reporting, comply to Sarbanes-Oxley, all those different processes you have there as well. Some of the other things that you have, obviously, the currency side of things, you have to be very flexible when you have multiple currencies. So, when we come into the solution, you're going to see, I'm going to show you a screen in a moment that shows the ability to do the currency translations according to the income statement and the balance sheet. So I've got my income statement at the average rate. I need to bring my net profit into the balance sheet. So I need to do a translation adjustment to make sure that that net profit comes back in line with the balance rate used on the balance sheet. So all of that logic, all of that functionality is built directly into the solution. You may have countries that have very complex ownership situations. Brazil, Denmark, the Netherlands, they are renowned to have slightly different ways of doing holdings and how you do eliminations. So one of the key things is being flexible with those solutions. A lot of the key areas we're looking at now are, around the reporting. We've talked about the allocations, the ability to do minority calculations, the ability to do joint ventures. So how do you account for those? We have the ability to do, very different reporting. So the consolidation solution comes with over 260 out-of-the-box reports. So what are those? They are reports that are meant to be designed for and really enable you to aid through that consolidation process. So those processes are reports of the journals, reports of the audit, reports of the organization hierarchy. They're reports that give you a quick start so you can start looking at the data without having to spend days and weeks and months writing your own reports. So, they are the logical reports that you would find. We have Excel as part of our reporting. You have the ability to, utilize Excel for some of the finance users, but you also have the ability to do web reporting and publish the reporting out to a wider audience. So some of the key things we're going to be showing you now, this is just one of the standard reports I was talking about. It so happens to be around intercompany matching, but this is a standard report. You basically ask the system and say, this is my receivable, this is my income, this is my payable, this is my cost account. How do we validate that data? And you can see where there's differences. You can see between the Eastern US company and the Western, I have a difference because the Western USA company, they haven't entered anything in their intercompany books. So this gives us the visibility and enables subsidiaries to actually be part of this process and to start having that conversation with their counterparts to say, I've got this balance with you, you're showing nothing, where's the disconnect? So it gives us the ability to have a very, what I would say, communicative approach within that consolidation cycle. Another report is the validation and reconciliations. We talked about this earlier. You need to have a trial balance that balances. That's imperative. You need to make sure your net income in your balance sheet equals your net income in your profit and loss. You might have a fixed asset register where you're doing validations. Does my closing balance equal my opening balance? So these validations and controls, they're all through standard application reports, but they are controlled within the system. So you can't submit your data unless you've passed all of these controls. Currency conversion. I mentioned this just a few moments ago before I started getting into the screenshots. One area you can see down here is the translation adjustments. When I'm going from Canadian dollars into the US dollar, you can see the exchange rate applied, and then you can ultimately see where the exchange adjustment is coming in to bring that profit number back in line with the balance sheet rate. So all of this is automatic, and really once you've configured the solution, these areas are taken care of just on a month-by-month basis when you run that consolidation. The investment and intercompany eliminations. This is all the automated process. It tracks the ownership history. So if you make an acquisition of an organization over time, so you might be a minority holder in the company now, but you may make an additional acquisition in that entity that makes you 100% owner. The investment register within the consolidation solution will actually track all of those changes for you. So one of the key things that provides you all of that history, all of that information that's going to help you see how the organization has evolved over time. The trial balance is really the report of all reports, really. It really tells you, does my consolidation make sense? Does everything balance? Does everything I've done with all the eliminations, does that make sense as well? So it really gives you a full audit of that whole consolidation process. It shows you all the eliminations that have taken place. It shows you all the allocations. It shows you all of the translations that have taken place, and gives you the flexibility to drill down into the details and to get more information underneath these underlying numbers. So you can drill down on the information here, and you'll ultimately be able to see what eliminations have happened on each of these numbers. You can see I've got an investment in subsidiaries of 0. Underneath that will show me what the investment is and show me on the parent company that this number has been eliminated, because that ultimately is what the parent company has invested in its subsidiaries. We saw the organization structure right at the beginning of the presentation today, where we had the different structure of how you could make changes to the organizations. Now what we have here is one of the standard reports. You can see the information here is very nicely laid out. This is a report you don't have to create. If I add a new entity, a new subsidiary into my hierarchy, that will automatically appear in this report here. All these reports, you can actually export them into different formats. So if I wanted to externalize this report and send it to the CFO, I could actually just take this as a PDF and email it directly to the CFO. So this gives me the flexibility to not just have things within the solution, but to take them and actually push them out to a wider audience. We mentioned, the Excel reporting, Excel is a key component and something that we know finance can't get away from. We give different reporting options, Excel being one of them, but this just gives you an example. You can see a comparative report here, cumulative year-to-date data plus the monthly information. You can see the actual, the budget, the last year, the variance to budget, the variance to last year. So it's showing you all the information being pulled directly from the consolidation into an easy-to-consume report. And you can build report books with this information. You can provide parameter-driven reports that enable you to not just select the entity, but I can have one report that I can run for multiple time periods, for multiple subsidiaries, for just consolidated nodes. So it's one template that's utilized through parameters with all the different selections that you have available to you. On the other side, you may have an audience that you have a number of stakeholders that really don't touch the consolidation. They're just consumers of the information that you have. So the ability to provide web reporting, provide reporting through mobile devices. Everyone's got an iPad, an iPhone. Everyone's, got all these different mobile devices. So it's the ability to provide all of that information to the executives on the go. So when they're looking at the information, they don't always have to be connected into their laptop, into their desk machine. They can take the information and make decisions on the go as well. So the highly graphical, the highly visual dashboards and reporting, this really just enables you to extend that reporting and to give you the ability to really give that information and to share that information to a wider audience. This is just an example of some of the North American customers that are utilizing our consolidation solution. You'll see a lot of household names there, for example, Tyson Foods, United Rentals, Gibraltar Industries, the Blackstone Group, Del Monte. All these organizations are using not just our consolidation solution, but they're utilizing extensions on top of that. They're utilizing our planning process, that they're utilizing our disclosure management, which Rob mentioned earlier as well. So, we have a lot of customers who are utilizing our solutions, and really these are customers that, are available to talk to, and that's something that, as we get into a process with an organization, if you've got interest in, what you've seen today, that's discussions that, we can have with Rob and kind of work out the next steps going forward. What I'd like to do now is really just pass it back to Rob and the team just to ask, what questions we have coming up, and really just to, finish up my portion of the presentation and to hand back to Rob now.
Thank you, Ben. That was a very good outline of the capabilities of the Cognos controller application. It is the cornerstone element for financial reporting, I believe, and that we believe here at Next Dimension for financial professionals. I'm looking at the queue, and I actually see a couple of questions. One of them actually has to do with the consolidation tool itself, and it says it looks like this is a tool that would be something that only publicly traded companies might need. Ben, I'm going to pass this back to you, so maybe you could address that one in particular.
Yeah, no, that's a very good question. I think one of the reasons people may think it's just publicly traded and it's used for that is kind of the SEC side of things. But we have a lot of organizations where they are privately held, where they do have multiple subsidiaries. They have subsidiaries around the world, and they have the same challenges that some of these publicly traded companies will have. And you also have a lot of companies where, they are thinking about going through IPO, they're thinking about going public, so they need to look at their systems and start acting like a publicly traded company. So when they go public, they will have a lot of demands, a lot of pressures put on them from the SEC and auditors. So that's partly why organizations will look for a solution, because they have the challenges currently with their current process, and they have multiple subsidiaries, but also they're thinking about going through an IPO and thinking about becoming public. So this is something that they are looking for to actually make that process a lot easier going forward.
So I see another question that's come in. This has to do with the various applications themselves, and it says, you've said that an IBM has a comprehensive solution set for performance management, and identified several different applications. Do these applications share a data source? The answer to that is yes. Yes, the various applications share data sources, and they actually all integrate to the IBM TM1 data store, as well as a variety of other data stores like the Oracle database, Essbase, DB2, Microsoft SQL Server. So it doesn't really matter specifically what it is that you might have, whether it be on your ERP system, what have you, maybe some other system of record that you're wanting to pull data from, whether it be from a planning perspective or for the reporting tools or business intelligence. The IBM solutions can marry up to that. Are there other questions?
I think I see one here, Rob. I'm not sure if you want to answer it on me.
I think this one belongs to you, actually.
Okay, so I think the question is, what does a typical implementation look like, and what is the time frame? So I think, to answer that question, it's obviously, there's a lot of components that go into an implementation, and I think a lot of the considerations are, what is your current process? So, when we start to engage with an organization to talk around implementations, we will look to understand what their current corporate chart of accounts is, how complex their organization hierarchy is, how many different ERP general ledger systems are we going to need to connect data from. So there's a lot of components that go into that process, and that's really, one of the beauties of the solution is it's a process that's defined. So you're not having to build all the code, all the script every time you build an application up for a customer. We have a defined methodology that our partners work with, and this methodology really is a mapped out approach to what's required to get your consolidation system up and running, and that mirrors across a lot of our solutions. So it really is it's a factor that comes into it, and a factor of not really being a coding system, a system that's a configuration. We do see our timelines as being very rapid in comparison to other solutions out there in the marketplace. So that's from a high level kind of what I see from implementations. Rob, from your experience, do you have anything to add there?
I would say, Ben, that from our perspective, certainly we're following a standard methodology, most definitely. But one of the things that we've learned as we've worked with a number of different organizations is while the methodology is fairly methodical and regimented, and we apply it as appropriate in individual circumstances, every organization is unique. There are different people involved, and they have different responsibilities. They bring different constraints to the table. Every organization's got internal resources, perhaps, that they want to bring into an individual project. Most definitely, one of the things that we have found to be absolutely true is that the more invested that our clients become and are in terms of these kinds of implementation projects, absolutely the more successful that they are. It's after more than 2 decades of implementing accounting and financial solutions, that has been the absolute truth in every project. If we could point to successful projects, it always comes down to pointing to 1 or 2 people within our client who has contributed significantly to the success of that project. And we look to try to leverage that person into the process with our guidance as we go along. That really does contribute very much to the success. But we are following the prescribed methodology for controlling the process, and that contributes significantly to the success as well. So it is definitely a relationship and a partnership that is a trusted process similar to what you might have with your accounting firm. With that, I would like to thank you all for joining us today. We will send out a link to the recording for this session, and we look forward to hearing back from you if you have any questions or if you'd like some additional information.